Winning the game is what business is all about. Here's the strategy. If you want to make money, be the first to follow business-breaking stories before you watch your favorite game. Sit back. Stay ahead of the competition. Get ready for Monday morning. This is Business from New York. Winners and losers.
The fight for NAFTA in Congress may be over, but now the real battle begins. Will businesses around the nation gain or lose? Will this free trade zone from the Yukon to the Yucatan be a blessing or a curse? To give you a clearer perspective, we've asked two guests to join Jim Rogers. Bob Hormats is Vice Chairman of Goldman Sachs International and former Assistant Secretary of State. He sees NAFTA as a way of looking beyond our borders to strengthen America's economic well-being. Edward J. Cleary is president of the New York State AFL-CIO. He's concerned NAFTA will reduce payrolls and in turn weaken our economy. Jim, it looks like you've got a real scrimmage forming on that 50-yard line.
Thank you, Leslie. You know, Bill Clinton may have just won the NAFTA League championship, but the people who are opposed to it are just absolutely furious. And those who are in favor of it think that this is a way to enhance America's greatness. Now, let's go beyond the rhetoric. Let's find out which businesses and which companies are going to come out ahead and who's going to suffer as a result of all this. But before we name names, Bob, let me start with you. We are going to lose some jobs, and they're probably likely to be low-skill jobs, and they're likely to be in urban areas. Isn't this going to hurt sort of the tax basis?
It will certainly have an adverse effect on some urban areas, particularly areas that produce labor-intensive products, textiles, and some light machine tool products. That will hurt the tax basis, but there will also be companies that gain, and the tax base will increase as a result of those gains.
Do you agree that there are going to be some gains somewhere?
I don't believe there'll be any gains in the area of taxes because of the breaks that are given to any corporations that maintain their headquarters in the United States. They're bound to laws down in Mexico to pay taxes to the Mexican government and also pay taxes here in the United States.
Do you see any gains, Ed, from this bill?
In the long run, I believe there will be gains because our nation has already lost its industrial base, and if this is an opportunity to bring the industrial base back, then there's a blessing for NAFTA.
Well, Perot seems to be the loser, but if things go wrong in the economy, won't Perot come out and say, aha, it's all because of NAFTA? Would you support Perot in a case like that?
No, I think Ross Perot just probably the only thing he did in this debate was to raise the consciousness of America in regards to all the people in America, in regards to the trade policy that we have to start taking a hard look, like the Europeans have done in their 12 nations, have taken a hard look at their trade policies.
But labor would not support Perot if he starts bashing NAFTA again.
No, no way.
I think it's the stimulus to trade that results from this. For instance, where will the tax base increase? Good question. Financial companies, our company, many of the banks that are in New York will do much better as a result of this. Computer companies will sell more goods to Mexico and to Canada. A lot of agricultural companies will sell more goods to Mexico. Telecommunications companies, all of them will sell more goods, all of them will pay more taxes, all of them will employ more people.
But if I'm sitting here watching this show, where should I be looking? Should I be investing in company? What kind of company should I be investing in, or what kind of business moves should I be making?
Well, I think they're good investments in Mexico in a lot of sectors, since I think the Mexican economy will do very well over the next couple of years. In the U.S., however, financial institutions, a number of banks that have a presence in Mexico should do extremely well. Companies that sell telecommunications equipment, the Mexicans need to increase their telecommunications facilities enormously, and those are good investments. Computer companies will do well. Boeing is going to sell more planes to Mexico. A lot of high-tech companies will do extremely well in increasing their sales, but we should bear in mind Mexico is only 5% of U.S. GDP, so the benefit isn't that enormous. There are bigger markets elsewhere.
One of the industries I know is going to do well is the yogurt industry, believe it or not, because the tariff on yogurt has been 20% into Mexico, and that's being reduced to nothing. So maybe we should all start yogurt shops in Mexico. Ed, now who's going to suffer? I mean, you've read the bill. You know what's going on now. You've had time to digest it.
Jim, I think we have to understand, I don't think there's a person in the United States that opposes a trade agreement. Trade agreements are like free air. They've always been around, and they're important to the development of any country.
But which of your industries, I mean, you have many members, which industries are going to suffer the most?
Well, we've suffered in the state up until now on the industrial side that have moved down there. I don't see anybody else that could really be impacted.
But 5 years from now, how is your union membership going to look after NAFTA?
Well, we went through the hard times of the 70s when everybody said that the unions would not be around anymore.
NAFTA is not going to achieve any miracles for the U.S. economy or the Mexican economy, but I think a number of high-tech industries in this country will do much better as a result of NAFTA because we'll sell more to Mexico. Computer companies, chemical companies, telecommunications companies, many of those companies. And the Mexican economy will be a much stronger, more stable economy, and the political system will also be stronger and more stable. So we're all better off 5 years from now.
Well, Bob, if the political system is going to be better, maybe we could export some of those bureaucrats that Ed was talking about before, and we'd all be better off. Anyway, thank you both for your comments. Let's recap. On our scoreboard, we list some of the following industries. Chemical companies, corn farmers, pharmaceutical companies, the yogurt manufacturers I mentioned, they're all going to do better. There's some industries that are going to suffer, however. There are the apparel companies, textile operations, wheat farmers, electronics manufacturers. Everybody does agree that change is going to be a lot more gradual than immediate. NAFTA is going to create some opportunities, but it's not going to guarantee any short-term success. Remember, mañana might be a long time away.
Coming up, learn how to buy art and invest at the same time, and get the bottom line of what's happening at Prudential Securities. There's much more on Business from New York. The business of
Art has always been big business. Currently, record prices have investors looking for signs the art market is on its way back from the depression of recent years. In New York, at the premier auction houses of Christie's and Sotheby's, sales of contemporary, impressionist, and modern art topped $200 million. That's up nearly 15% over last year's fall sales. But is art and investing only for the very well-to-do? We talked to Kathleen Guzman, president of Christie's East, about bargains in the art world.
Sure, there are bargains in the art world. That's why we're in business. The best bargains, though, go to people who are the most informed. You could collect in any category you desired. For example, an Alexander Calder mobile that we sold for $231,000 in our last sale, you can buy a gouache by Calder, and a work of art from the period that he did from the 50s for about $5,000. I would consider that a pretty darn good investment.
You may know this face. It's Chuck Close, a prominent contemporary artist. He's most noted for his portrait paintings. Chuck believes that you must love the art you are about to collect.
One of the great things about buying art is the bottom falls out of the art market, you still have something you like. You're not going to hang a stock certificate on the wall. Some of the best work being made today is being made in the art prints, usually by people who are primarily known as painters or sculptors. But there's tremendous work out there at a very modest price.
When you think of the business of art, one name comes to mind: Peter Max. His psychedelic artwork was the calling card for the 60s generation. He was one of the first artists to license his work. Today, his work is still at the cultural forefront. But is Peter Max a businessman, or is he an artist?
I am an artist. And, you know, you live in a world where business goes on, but I am an artist. I have to deal with business situations. And I deal most of the time, 98% of the time, in my room all by myself, between me and my canvas, which is 10, 20 inches away. I would suggest a new collector, buy sign posters, buy lithograph, buy etchings, and of course, move into the originals, where the artist creates the original that's made right there. There's no other original like it. There's nothing more scarce than art. Gold is not really scarce. They're going to mine it forever. Diamonds aren't scarce. Buildings, there's buildings in every city all over the world. But art, how many paintings did Picasso make in his lifetime? How many works have I made in my lifetime? Maybe only one person or two people in every city in the world can own a Peter Max.
With me now is Robert Mnuchin, an art collector who has his own gallery. Formerly, he was at Goldman Sachs, where he was a partner in charge of equity trading and served on its management committee for 15 years. Well, I must say you took an abrupt career turn. What was it that made you go into art full-time?
Well, it wasn't abrupt, because when you've done something for a long time and you like it as much as I did, really it's a very slow decision to leave, and mine was a slow decision to leave. And I left because I wanted to try to do other things.
The art market has taken some hits. Where's it going from here?
I think a lot of the art market has adjusted. Some of the art market is already firmer or at higher levels than it was. and some of it is probably going through its adjustment.
A lot of gallery owners, when people ask what should they collect, speak of specific areas of art. You have a different kind of answer, don't you?
As Chuck Close referred to, I think the important thing is to have almost a passion about what it is that you're looking at and thinking at and acquiring, whether it be 18th century teacups or canes, antique canes, or paintings or prints or anything else.
Robert Mnuchin, thanks so much for being with us.
Thank you.
And let's go over to Jimmy Rogers now with our power profile. Jimmy, what have you got for us?
Can you imagine, for every dollar you earn, you put aside another dollar for a legal problem you've got? That's exactly what's going on at Prudential Securities. Last month, Prudential Securities agreed to pay 371 million smackers in fines and restitution to thousands of investors. Those poor investors bought limited partnerships in the 1980s only to find out later about the allegations of widespread fraud. Without admitting or denying any wrongdoing, Prudential Securities decided to settle. We talked to Hardwick Simmons, Chief Executive of Prudential Securities, about what's happening at the fourth largest brokerage firm in the United States. Wick, this has been a disaster for Prudential and for the investors. How did it happen and why?
Well, it really was a situation that just, I think, got out of hand for a while in the mid-'80s. I mean, most of these partnerships were sold during that period of time, as you know. Most were sold as they should have been, but unfortunately were just too many times that individuals who were unsuitable bought the partnerships, or candidly certain sales materials and or certain sales presentations may have misled them.
Should your investors worry about whether you're solvent?
About 2.5 years ago, when we first looked at this problem and sized it up, we thought it might be a multi-hundred-million-dollar problem for us. At that time, we started to reserve. Thank goodness we've had wonderful markets, as you know. We've made a good deal of money, and therefore we're in the position this year where not only will we be able to cover that reserve, cover the additional fines, but in addition we'll add $100 million to our capital.
Is it possible for individuals to make money in this sort of environment?
What's happening now is we're moving back out of fixed income vehicles because interest rates have come down somewhat into good, solid stocks and bonds. Over a long period of time, I think that's the best way for an individual to invest.
Let's learn a couple of lessons from this. One, if somebody sells you something that's too good to be true, it is. Stay away. Second, don't ever invest in something unless you yourself understand exactly what's going on. Do not invest your money with someone unless you understand perfectly. Put your money in the bank and wait for something that you understand. Otherwise, it's a fast road to the poorhouse, or at least to a very big headache.
If you want to know how the upcoming year will shape up, follow the January barometer. If the S&P 500 stock index closes up for the month of January, there is an over 85% chance that the year will close higher. That's the way it's been since 1950. Coming up later, learn about a public company that's at the cutting edge of airline safety. More on Business from New York. City to city.
New York has always been an expensive place to visit, but most tourists don't have any idea until they try to check out of their hotels, and boy, do they get hit. Here's our special city-to-city report by Stephanie Shelton on sticker shock and how it affects New York's business.
Jim, the Big Apple competes with many other places for conventions and business meetings, and with companies clamping down on business travel expenses, New York has been losing out. Not because its prices are so high, they are, but that's expected, but because of a 3-year-old state-imposed hotel tax that hotel people say is the straw that has broken the camel's back. Are you familiar with New York City's hotel tax?
Yes, I am. Painfully. Yeah. Think it's outrageous.
This is what you see on your hotel bill for every night you stay in New York City. A 5% New York State tax on rooms costing more than $100 a night. That's most rooms in the city. A 1% New York City tax. An additional 5% New York City occupancy tax. An 8.25% sales tax, nearly half for the state, the rest for the city, and a flat $2 a night New York City room tax. Total, 21.25%.
Anytime that you set a tariff that high, it just says that, well, you know, we're going to tax you, and we know that you don't vote in the New York City area or New York State, so come into town, spend your money, we're going to get you when you check out of your hotel room.
Ironically, the hotel tax ballooned 3 years ago, just as the recession kicked in. The state legislature decided another 5% tax on hotels would be a politically painless way to close the budget deficit. That made New York's hotel tax twice as much as the average U.S. city. In cold cash, the tax adds an average of $23.74 to the price of a hotel bed in New York. The average tax in dollars for the top 25 U.S. markets is under $8. In Chicago, the next highest city, it's still less than $12.
This is actually costing the state a loss of tax-generated revenues. The findings suggest that the state, in fact, will lose out some $94 million.
Conventions coming to New York City are off about 30%. There's an organization called the Professional Convention Management Association. They are currently boycotting New York City and will do so until this tax is repealed.
We have a domino effect. There are approximately 16 other industries that rely heavily on the tourist and on the tourist dollar.
Estimated jobs lost in the hotel industry in the past 3 years, 6,000. 1/3 of those just because of the extra 5% state hotel tax. Estimated additional lost jobs from the hotel tax, another 6,000.
In a positive way.
Rudy Giuliani campaigned on a promise to get the state tax repealed, a promise the new mayor says he'll keep.
If you phased in a reduction, and I will talk to the groups that have been sending around the boycott notice and see if they wouldn't be willing to reverse that advertising and now send out advertising encouraging people to have their conventions in New York.
The new mayor has also promised to look at the city hotel tax, but with budget deficits looming, the tourism and the hotel industries may just have to find other ways to polish the Big Apple. I'm Stephanie Shelton for Business from New York.
You know, that's a textbook case of how not to run a city. To raise your taxes that much, how are you going to possibly compete? Because you're just going to drive away the tourists, you're going to drive away the conventions. I suspect that in Miami, Houston, Los Angeles, Chicago, they're all watching this tape and saying, we know what to do next.
It will be interesting to see if the Giuliani administration will be able to cut hotel taxes given the huge deficit that they're facing. And now for our corporate scorecard. It is the American dream. Design a new product, build a plant, sell to a receptive market, go public. Shareholders and management are happy. The best part about it is that these dreams come true year after year. But not every company is successful. Today, we're going to look at one that may or may not be on its way. Here's Jim's report.
Today we're out on Long Island visiting a company called Robotic Vision Systems Incorporated, RVSI. Now, RVSI is a company which is in a whole new industry. It's called machine vision. In other words, machines will now look at the parts, machines will do the inspections, machines will do everything that people have tried to do in the past. Pat, how was inspection of semiconductor chips done before?
All of the inspection before was done manually. Even today, a very high percentage of the inspection is still done manually.
You're selling these machines at quite a rapid clip right now. So how many more do you think you can sell? Is there a market for 10,000 or a market for 1,000 more?
Well, I wouldn't say 10,000 for this application, but perhaps 1,000 or more. We recently announced a breakthrough development in another industry, the field of airline safety. We have developed a machine that can detect ice on aircraft wings. We've done extensive testing in the plant and some field testing, but this ice season we hope to deploy a handful of units with airlines to be sure that we understand completely capabilities of the system and then how to integrate it into present flight line operations.
With me is Richard Swartz. He's a technical analyst who's been following the electronic imaging industry for the past 10 years. Richard is president of his own firm, EI Consortium Incorporated. Richard, is this industry finally going to take off?
I think it is taking off. Now, when you say this industry, electronic imaging is very broad. One of the areas is machine vision. I think it's got traction, although it hasn't been an easy road to date.
So is RVSI now going to make it?
On a fundamental basis, I think they've paid their dues. They've stuck it out. They know the applications. They've made a very difficult transition from dependence on military and at one point a retail business into real industrial applications.
And how much of a future does this new machine have?
It does something that's very important on a very important product called the semiconductor chip. And it relies on the core technology of 3D imaging with which they've been familiar with for many years.
And does they have a 3-year future, 5-year future, 10-year future?
I think they've got a future that's a lot more than 3 years, but they're going to have to keep running hard. Electronic imaging now is something that everybody's into.
Who else is in it?
Well, broadly speaking, literally hundreds of companies. In the machine vision area, Cognex is a public company that's well recognized for having done a good job. Perceptron, probably less well known, has also done a good job.
And they have a new product for the airliners. Do you think that's going to work?
Well, I haven't done a detailed analysis on that, but it's an application that surely has a lot of need. It dovetails with their core strengths, and this is a credible management. My bet is that they've done their homework on the distribution side as well.
Thanks, Richard. Well, as we've heard, the company has a strong position in the semiconductor industry. Richard thinks it's going to do well for the future. I happen to agree with Richard about the de-icing device. I wouldn't buy this stock unless I'd done a whole lot more work on the de-icer, because if the de-icer doesn't work, the stock's already gone up a whole lot on semiconductors, and that may be the end of the game, but we'll see. Thanks, Richard.
Out on a limb.
Gentlemen, it's easy to be a Monday morning quarterback, but it's tougher to make the calls. We have about a minute left. Bob Hormats, what's your call for the week ahead?
I think that as Giuliani starts to address the New York City budget deficit, which is larger than most people anticipated, as we get closer to December and people start worrying about the very large tax burden they're going to have to pay, federal taxes in particular, and as it appears that the Fed is not going to raise rates, New York municipal bonds are going to look very attractive to investors.
Jim Rogers, how about you're going out on a limb? What do you see for the week ahead?
What I'm extremely worried about coming up is I'm watching the commodity markets, because I'm afraid that inflation is going to come back next year. I'm afraid that interest rates may suffer next year. I'm keeping a very close eye on the commodity markets. What I'm really waiting for is the Paramount merger to be completed, because I want to, whoever wins that and however it comes out, I want to sell short the new company, because I think it's a vast overpayment.
Gentlemen, thank you. And that's our edition of Business from New York.
Enjoy your football. Enjoy the rest of the day, because Monday's going to be here soon enough.
Statistically speaking, Mondays are the worst days to sell shares. If you want the best price, sell on Wednesday. That's what statistics have shown from 1967 through today.